Hi, this is PR Sundar. Welcome to this special episode where I am going to talk about gamma effect. So there are 5 option Greeks. So say delta, gamma, theta, vega, rho. I really don't bother much about the Greeks, but this gamma, it's a very important thing. I would like to talk about this gamma effect. Instead of like explaining using complicated language, you remember the 3 Idiots movie? So there he talk about giving the definition of book. So I don't want to make things very, very complicated. In fact, there are people who make it so complicated so that they can even run some training courses for this option Greeks. The option Greeks is nothing, don't worry. But this gamma effect is very, very important. In simple language, so what is gamma effect? So the gamma effect is a violent move towards the end of the expiry. Say for example, today is 27th of January. This video is being shot on Thursday, 27th of January. Let me check. Yesterday, Nifty 17,000 put option closed around 28 rupees. For example, yesterday, Wednesday was a public holiday. So on Tuesday, Nifty closed somewhere near 17,300, 17,280 or something. But 280 point below 17,000 put option, it closed around 28 rupees yesterday. That is on Tuesday. But today, markets fell so much and this 28 rupees option has gone up to 150 rupees. It's more than 5 times. If you are a seller of option for 30 rupees, then in panic, if you are squaring it up at 150 rupees, that means you lose 5 times the money, 5 times the premium collected. Or if you are an option buyer, you buy for 28 rupees, if you are smart enough, you could have sold around 120, 130, 140, 150, anywhere. But if you have held on to the expiry, that would have gone back to zero. Remember, an option buyer has to exit the position when there is a momentum. But option seller can hold on until expiry. But despite holding on expiry also, the people can lose. That's because, when the markets move violently, the option premium tend to multiply 5 times, 10 times. Today morning I saw Bank Nifty 38,000 call option was trading around 10 rupees. It has shot up to 100 rupees. That's because, because of short covering, Bank Nifty shot up 1,000 rupees today. So 10 rupees option can go to 100 rupees. If you are a seller, you will lose heavily. This kind of violent move towards the end of the expiry is called gamma effect. Why? Because if this happens in the beginning of the expiry, the option seller don't lose so much. In the beginning of the expiry, the option may be trading at 100 rupees, it will not go to 1000 rupees. But closer to the expiry, 10 rupees option can go to 100 rupees, even 500 rupees. The option skew, the option sellers tend to lose a lot of money and option buyers tend to make a lot of money when the markets move violently. So violent move towards the end of the expiry is called gamma effect. Do you know what they call in US expiry day? So expiry day is known as witching day. 4 times in a year, stock options, stock futures, index options, index futures, all the 4 will expire on the same day. That is why it is known as quadruple witching day. Quadruple means 4. Even managing one witch is so difficult. It's a quadruple witching day. So 4 witches come together. So the markets tend to be hugely volatile. Somebody has done some simple research. 5th of every month is called mutual fund day. You know why? People get salary on 1st. Sometime if the 1st is a Saturday or Sunday, you may get a salary on 2nd or 3rd. On 5th, you can invest the money. Every month some money. So that's why for SIP, 5th of every month is known as mutual fund day. But somebody has done some research. Instead of putting the same amount of money every 5th into the stock market, if you put the same amount of money on every expiry day, because expiry day, it doesn't come on a fixed date. Expiry day is last Thursday of every month. Last Thursday of every month will not fall on the same date, not 28th, 29th like that. So sometime it can be 25th, sometime it can be 26th, sometime it can be 27th. So instead of putting a fixed sum of money every fifth, if you can put a fixed sum of money on every expiry day, you will be really outperforming the other people. What this shows that most of the time on expiry day the market will be down. Even today also, Nifty was down, of course Bank Nifty was up. I'm going to show you some interesting fact. Look at my screen. So you see, in the beginning of this month, FIIs did not sell much. But come towards the end of the month, you look at the way FIIs are selling 7,000 crore, 3,000 crore, 3,000 crore. Not only this month, you can go and check some other months, maybe look at the December. December last few days there was not much selling. That's because usually after the Christmas, from Christmas to New Year, usually they go for a holiday. So therefore they did not sell much in December. But look at the November, look at the last few days. 5,000 crore, 3,000 crore, 5,000 crore. Before that you see it was 500 crore, 1,000 crore. It was so severe selling in the last few days. And look at the October, last few days 5,000, 3,000, 2,000. Like this, towards the end of the expiry, FIIs also tend to sell in huge quantities. Now the question is, why FIIs are selling so much on expiry day? Why FIIs are selling closer to the expiry day? Why this gamma effect is coming? That's what I'm going to try to explain to you. Let me take one example. I'll tell you 2 or 3 stories. Story number 1. Let us say I'm a fund manager for an FII sitting in US. My boss from US called me. Please sell 500 crores worth of HDFC Bank shares. Because this guy is holding 500 crore worth of HDFC Bank shares. He want to book the profit. Then I'm the in charge. So if I go and sell 500 crore worth of HDFC Bank shares, what will happen to HDFC Bank shares? It will fall 50-60 rupees immediately. Then I cannot sell at the right price, because the prices will definitely fall. Then I asked my boss in US, okay, you want to sell 500 crore worth of HDFC Bank shares? Yes, I will do it. But my question to you, do you want the money immediately? He said, no, sir, we don't need money immediately. But because we thought we bought it around 800 rupees, now it is 1500 rupees, we just want to book the profit. Okay, then I'll tell him, okay, don't worry, I will sell it. And what I will do here, if I sell 500 crore worth of HDFC Bank shares, surely that's going to crash. But what I will do, instead of selling it in the cash market, slowly I will be selling futures. I will sell the HDFC Bank futures. Because HDFC Bank futures will always be trading along with the cash market. In fact, it will be trading around 5 to 10 rupees premium to the cash market. Slowly I sell for 500 crore worth of HDFC Bank futures. Then happily go home. And then come on expiry day. You create a computer program so that 10 lakh worth of HDFC Bank shares, let us say one lot is 10 lakh rupees. 10 lakh worth of HDFC Bank shares, sell. The moment you sell 10 lakh worth of shares, then cover the short. One future short you cover. That will also be 10 lakh. Then sell another 10 lakh, then buy another 10 lakh future, sell 10 lakh cash, buy 10 lakh future. Sell 10 lakh cash, buy 10 lakh future. But here also the price will fall. If I do this program, HDFC Bank share will definitely fall. But who bothers? When HDFC Bank shares fall, the future will also fall. If I lose the money in HDFC Bank shares, I will be gaining the money in HDFC Bank futures. I will be able to sell the entire 500 crore worth of HDFC Bank shares without I am getting into any problem, because the share price fall. If the share price fall and the market fall, I don't care, but I am safe. Instead of doing this, if I go and sell the same day when my boss give me the instruction, if I go and sell 500 crore worth of shares, definitely the price will fall by 50-60 rupees and I will not be able to sell at the right price. But by doing this small trick, not only I can sell at the right price, the future price will be trading around 4 or 5 rupees premium 1 week, 10 days before. That is also becoming my profit. So this is story 1. And this is a very mild story. This is what some good-hearted people will do. There are some bad people. They just don't care about anything. They just care only about their profit. And what they will do, if my boss asks me to sell 500 crore worth of HDFC Bank shares, instead of selling, because if I sell, the price will come by 50-60 rupees. Instead of selling, I go on short same quantity of futures. Now I have a 500 crore worth of shares, 500 crore worth of short futures. So what I am going to do, on expiry day, I am going to create the same program, 10 lakh sell in the cash market, 10 lot buy in future, means squaring of the short position. But before doing this, I know definitely the price will fall 50-60 rupees. Even before putting this algo into the trade, what I will do, I will go and buy some put options which are trading at a very cheap price, and I will also be going and selling some call options, and then I will put this algo trade. Buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. I have nothing to lose because buy, sell, buy, sell, buy, sell. So whatever is the price come down in the share price, the proportional profit has come in future short position. In addition to that, I bought put option, that will also shoot up. I sold a call option and that will also go to zero. I plan to sell without disturbing my profit. Then on top of which, by buying the put option and by selling the call option also, I make a lot of money. This is what other people do. What is opposite of this? The markets are weak. Some people do short selling, and some people do short selling for 500 crore, 1000 crore like that. Huge amount of short selling. Once they've done the huge amount of short selling, on the expiry day, anyway they have to square up the position. Let us say somebody has short sold Bank Nifty future, hugely sold. He has been short selling throughout the month. On expiry day, anyway, he has to square up. How to square up? You have to buy the future. Whatever you have sold, you have to buy. And because these big people have sold so much, they have to buy also so much. So if they place a buy order for so much buy, then definitely the price will shoot up. They can buy slowly also, but then again they don't have the time. Instead, what they do, they just go and buy call option, then they go and sell put option, and then they go and place a buy order at one go. If they place a buy order, market order at one go, definitely the price will shoot up. They will be at some disadvantage. But whatever the loss comes because of the market order price going higher, that will be more than that will be compensated by the profit in the call option buy and put option sell. Some people actually try to identify through some technical analysis and when this is likely to happen. In fact, so I have been using one technical analysis. Of course, I have been following the technical analysis, but myself I am not taking any position. So what I did on this expiry on Thursday, so I found that this kind of activity is going to pick up when the Bank Nifty was trading around 37,300. So that time 37,000 call option was trading around 340 rupees. I said you can buy 37,000 call option at 340 rupees, put a stop loss at 280 rupees or 60 rupees is the maximum loss. This call I have given in my Twitter handle. At 340 which I bought, it shot up to more than 1000 rupees. What is technical analysis? So basically some people do something that you have no access to the data. So, but the technical chart will be able to show you through the price action. So suddenly you may think, Mr. Sundar is the one who came out with a video called technical analysis is bullshit. Now he is talking about technical. Even that technical analysis is a bullshit video. You just go and check. I never spoke anything against technical, but what I said, don't only look at the technical. I don't look only at one thing and I look at everything, and based on everything I come to a conclusion. Once I met one friend who is a technical analyst and he was talking to me so arrogantly. I don't care what Narendra Modi says, I don't care what Arun Jaitley says, I will look only at the chart. What chart tells me, I will do it. So I am against that. So you have to look at everything. If you are a technical analyst, nothing wrong in looking at technicals, but don't only look at technical and do the trade. You also look at many other things. The technicals is just like a horoscope in a marriage. You don't marry a girl just only by looking at the horoscope, not by looking at any other parameters. So you look at so many things. You don't only see the horoscope. So the same way, in technicals also, you don't only look at the technical. That is my policy. There are 99% of the people in India, they just only look at the technicals. They don't look at anything else. But I look at many things and then technicals is also one of them. So technical will definitely complement your thought process, but technical alone is not a good idea. That's because, probably I am saying few things because of my experience. Personally, I have not seen anybody making very good money only by following technical. So that's a fact. So I hope you learned what is gamma effect, what is quadruple witching day, what is mutual fund day, and then how some big people manipulate the market closer to the expiry. Hope you enjoyed watching the video. Thank you for watching.